Singapore, but that's fine because we have to understand that um the when MNC come to Singapore, they will also create organic growth for the rest of the listed company or non-listed company in Singapore as well. So as long as this statement was made that Singapore cannot exist other than as an island city-state connected to the world. So we will continue to connect to the world. So naturally, the flow will come in, then there'll be organic growth to our listed company here in Singapore as well. So these are the two main reasons that why I believe that Singapore market is going to continue to be quite firm. Of course, in between, where I'm going to share with you in a short while, why I also believe that there may have some correction to come, maybe quite soon. Why is it so? It's pretty technical. Now let's just move on to the next topic here. The first topic which I covered that is the framework of what we have, that I believe that Singapore became a gem because of the external risk that you're facing. So the market outside Singapore have to find a safe haven. So Singapore is viewed as a safe haven to buy Sing dollars. And again, for those who have just joined us, that one way to buy in the Sing dollars is to buy our local equity that's priced in Sing dollars. Now let's discuss about the two major external risks that not many countries can control. Yeah, especially a very small country like ours. Now, the first one is inflation and the US economy uncertainty. Now, let's look at the inflation numbers again. I want you to take a few uh, good seconds to study through the inflation numbers since the 60s until current. Now, most of us will read the news that publish the inflation number for US, which is CPI or called PCI. But can I say that the Fed are looking at this even more closely, which is the core PCE. So they have a very similar behavior. But why core PCE? Because it measure the personal consumption of expenditure minus of food and energy. The Fed would like to see the livelihood of the Americans. Yeah, so they are looking even more closer to this PCE. And of course, it mentioned here that it's adjusted to changes in consumer behavior. Now, let me just explain about this this inflation number because it will determine the interest rate in the coming interest rate decision. And when interest rate is higher, also means that the borrowing cost for the American companies will be more expensive. It also means that the mortgage rate for the houses will be also more expensive because your monthly repayment, you have to pay more, right? So now let me just bring you back to this inflation chart again. And why I talk about US because it is related to the whole world. So when the Fed adjusts the interest rate higher, we as a small nation, we also have to follow as well. If not, we'll lose the competitive edge of our Sing dollar. So that's just one of the reasons. So now there's this term called that inflation currently is still is very sticky. Now, what do you mean by sticky is this? Now, this is inflation numbers that, Jerome Powell wanted to bring down the inflation to 2% and below. 2% is at least a benchmark, if not below. Now let's study the from the 90s to the millennium to the 2010 and onwards to 2020. It has been the inflation has been staying about 1 to 2%. Then of course that's COVID. It brought us up to about 9%. That's for PCI, but for core PCE, it was about more than 5.5%, as we could see here. But what I'm trying to say here is that the Fed has been increasing interest rate during this period, but they also cut a few rounds. But they failed to bring the inflation to their target 2% or below. So therefore, it's termed as the inflation is very sticky. It stick to this above 2%, it cannot bring down, right? So that's what I mean by it's very sticky. And now, before I bring you back to this current, you could see that the latest core PCE start to point upwards, which is 3%. Yeah, so inflation is not coming down, it's still there. When inflation is at 3, when it come down from 9% for PCI to about 3 now, it doesn't mean that things are become cheaper because things will became the same. That means from last year to this year, things are the same. But when I say 3%, it means that compared to last year, today these goods are 3% more expensive. So it's still higher than last year. Okay, that's what I mean by where inflation is coming down. But I want you to bring your attention to this, go back to the 60s. Now, if can we can see that before this high inflation, we or US were at a period of 1 to 2%. Then something happened. Then it kind of inflation kind of ease off. That's where the Fed back then also cut interest rate. So because of inflation came down, so they cut interest rate. But the moment they do that, if they're not careful, the inflation start to pick up again. So can we see a very similar behavior now compared to the 60s? Now, I'm not suggesting that inflation is gonna go up anytime soon, but because of the geopolitical event and the de-dollarization, the money printing is not new at all. There's always a risk that inflation may creep back up again if the central banks are not careful in managing it. So that's what I'm trying to see here. I'm watching this almost on the daily basis because once it get very sensitive, something else will turn. Okay, now let me just share with you the next chart here, which is very important. And there's some fundamental shift on the last day of January, somewhere around that period. Was it the last day of January? Yeah, 30th of January. Yeah, I remember because I was attending one of the event in town. Then the day was beautiful until the mid-afternoon. Donald Trump, President Trump, announced that he's going to nominate Kevin Walsh to be the next federal chairman. So he's not dovish, but I just want to explain that what is hawkish stance. Um, it kind of took the market by surprise because President Trump wanted the current Fed chair to cut interest rate aggressively. So we would have assumed that he will get in a guy that will cut interest rate. But in fact, Calvin Walsh is even more aggressive. I would say that Jerome Powell is more dovish and Calvin Walsh is more hawkish. That's according to Market Watcher. Now, so what is hawkish stance in Fed? Of course, I chat GPT. I think as an investor, you should do that as well. Then, of course, after the chat GPT give you the answer, you also have to verify. Okay, so we may have read that Kevin Walsh is going to be very hawkish. So what does it mean? Now, which I agreed what ChatGPT say. Let me just read to you very quickly. A hawkish Fed is a laser focus on controlling inflation, even if growth slows. So his focus will be on inflation. So he's going to take over from Jerome Powell, likely take over in May, and then the first meeting will be in June. So what I'm trying to say here is that coming June, May, June, whatever decision that is going to make, it may affect the market or may not. Yeah, so that one will be something to watch out for. And of course, when US market move, it will also affect Singapore as well. But I think the fundamental growth for Singapore is already set in. So the whole bottom line is that if the US market turns south, anything can happen. US Singapore market may have follow as well, but that to me it will be a buying opportunity. Which later on, one of the strategy I'm going to mention here, which I'm reserving quite a bit of fun, waiting for that to happen. If that happen, I would like to buy or acquire Singapore stocks on the dip, which I'll explain to you how I'm going to do that. So I need to make plan first. So whether it will come or not, that's secondary. Now let's go back to the hawkish stance. Means that he favor high interest rate, support rate high, or keeping rate high, and he don't like QT. He don't like printing money, and he prioritized price stability over growth. That means he's more focused on inflation than economy growth. So now, if he's going to not just this coming June, which I don't think that he will do anything, but it's still quite a while. But I'm more concerned about his term of being a Fed chair. What is he going to do? Likely based on his uh, uh, past statement, he's very hawkish. It means that if inflation is high, he will hike interest rate. So it's unexpected. Therefore, we saw that the gold and silver after 30th January it went down because when it high interest rate, it means that the US dollars will go up because you when high interest rate, investor would like to deposit buy more US dollars. So US dollars strengthen and gold should come down. So there's another topic which I did with CIS, G, CGIS some time ago. Is about the relationship between gold and US dollars. It's inverse relationship. So if high interest rate US stocks will not be good, bonds will be down, interest rate or yield will be up. US dollars is up and precious metal should be down. Okay. Now, so this is what something that I understand that May, June, and onwards is going to be very exciting period that is going to be volatile. And personally, I like volatility because volatility creates opportunities. Yeah. So now let's move on. Now, the other external risk that we have no control is the first one we discussed about it. It is inflation. The other one is the global conflicts and the likelihood of further conflicts. So, like what I said earlier, that according to UN, currently there's about 70 or more conflicts or war around the world. Because what we know and we read is the Russia-Ukraine, the Middle East, but there's also a lot of minor war that's going around. It is the highest number of war after World War II. So there's a lot of conflicts here. But of course, if it's spin out of control, the bigger ones, then there will be a disruption of the supply chain, which we kind of experienced it during COVID. That's not due to war. Certain things are became more expensive, and that's where inflation hit a high of 9% in June 2022. That's for US because of supply chain disruption because of COVID. Now, then, because of the Russia-Ukraine conflict back then, we also saw that the wheat prices that make the bread, the Europeans suffer quite a bit that they have to pay a higher price of this conflict between Russia and Ukraine. It brought the wheat prices to much higher. They have to pay a high price for their bread. But today, it kind of ease off. And in fact, the wheat prices is much lower than the Russia-Ukraine war. Is much lower, but it could be also an opportunity as well. So, which later on, I hope I can bring a showcase, a case study on one of the local stocks that deal in grains as well. Now, so these are the two conflicts that we discussed about, or two external risks that we have no control as a small nation of no control, which is inflation, high interest rate, it will increase the borrowing costs, and also the global conflicts around the world. Now, let me just talk about the two key strategies. Now, I'm halfway done, but I'm going to spend a little bit more time on these two key investing strategy with the external risk. And by the way, the external risk may get worse. Inflation may climb up if that's the case, or the global conflicts may get more intensified. Yeah. So now how are we going to handle this is this. Now, say for example, and since about I think 2021, 2022, I've joined CGSI to give this webinar. So advocating about investing in Singapore for long term. That was during this period. So of course we know about this household name, the Singapore Technology Engineering, ST Engineering. Say for example, you have not acquired any of these, not just these stocks, most of the blue chip stocks, or even STI ETF back then. So now, maybe you're fresh to investment, that this could be the first few webinar that you attend, but you have hope for the Singapore bond equities. I do have high hope for Singapore equities. But if you have not have a position around here or here, but today you start your investment at here, now I would say that is quite a difficult decision to make. Now, say for example, on this particular stock, which I like it a lot, ST Engineering, the current price earning ratio is about 41. So technically, it means that based on my personal understanding here, it may not be the most accurate answer, but in layman terms, it means that at the current price at 977, in order for it to double to 977, it need 41 years. That's what I'm trying to say here, okay? In a very layman explanation about PE ratio. No, so if you don't have a position here or here today, want to buy here, and most of the blue chip stocks, including STI, were here. But that doesn't mean that it will not go higher. It should go higher, but I would prefer a strategy called buy on dips. I will hold on if I find the ST engineering. If I do not have it, I find it's interesting to have it moving forward. I think I'll prefer to wait for a correction to come because of the external stress. Later, I'm going to give you one example, a very clear example that uh, our past webinar in 2025 exactly it kind of unfold. I advocate for you to wait for external stress to come. So it came. That was during the in April last year where President Trump announced the tariff, yeah, for the first time. So Singapore stock market also dipped quite a bit. So there will be moments like this that the market will retrace. So hold on to all these blue chip stocks, wait for a little while. I would prefer to buy on dips for those that, especially those price earning ratio is pretty high. Now, let me just share with you the other chart here. Why I felt that it's a bit too pricey to get in right now is this STI monthly chart. Um, Now, technically, this is a very straightforward where I have produced quite a number of videos just based on straight lines. Because when I present videos for on behalf of my partners with the exchange, when they ask me to make some videos about the market, I do not want to get into a study that's too complicated. Because something simple, if it works, it speaks to the wider audience. So how I draw a trend line is this. You have to look for significant trough for an uptrend channel. Look for significant trough. These was significant trough. These are significant trough. And these are significant trough. So when you join them together, it kind of form this uptrend line where it kind of it is beautiful. Then after that, you have to also mirror it to a significant peaks as well. Okay, so I put this as a reference. So I have this for the longest time, since here, I put it here, and that was my target back then when I presented for CGSI 2 years ago, where I advocate that STI is time to accumulate. If you still remember, the strategy was to accumulate, yeah, for Asian market. Now, this was prepared on 6th of February 2026 because I need to give it to Pei so that the team can get the compliance to approve it. So as of today, I checked 3 days ago, it kind of just shine off from this upper band, which is at 5041. It's almost touched this upper band. So now, if you look at this technically, if you have not acquired any shares around here or here, so today is a bit risky for me to get in a fresh position here. So I'll prefer to wait. But having said that, the old position, I still prefer to hold it. Yeah, because my long-term outlook for Singapore market is still going to continue to move up. But in between, they may have a correction to come. Yeah. So let me just bring you back to some past case study. Is related to by this quantamental analysis, which is combining technical and fundamental analysis. So in just about the last session that I did on 27 November 2025, the topic is about STI is as precious as the gold market. Yeah, so November last year, gold market was still trying to find a new high at 5,006. Then before we saw that January 30th, from 5,006, gold came down to maybe about 4,006, about there. Yeah, before now it's higher again. So this was what we discussed about a few months back, that if I look at the gold, of course, we could see a very similar trend. For the longest time, it was boring. Hardly people talk about gold. Then I love gold since about 2016. Then after that, we saw this is what I term as a value stage. And then gold, of course, it went up much higher. So in November, my webinar with CGSI was that I think STI is on the way up, just like gold. Yeah, so but now STI should be around here. But I think on the long term, STI is still as precious. Why? Because two things of Sing dollars. And why Sing dollar is so strong? Because the global investor have faith and trust in Singapore framework, how we do business. And we're going to continue to open up to do business. And of course, in between, there will be some turbulence. Then May, June will be a time to watch. because maybe Kevin Walsh may become a federal chairman. Whatever policy he may roll out, it may cause some turbulence to the market, or it could be some external factor like the geopolitical issue. But this is not for us to speculate, but we have to stand by what is the external risk ahead. But what is the outlook, the long-term outlook for STI or Singapore stock market? I think the runway is still very high. Okay, it's just that at this juncture, I'm waiting for. I hope that there'll be some correction to come. So when it come, my strategy for Singapore market, and one of the strategy is to buy on dips. So later I'll give you some key level. What are the level we should look out for to buy into dips for Singapore market using STI as a reference? So during the Q&A, we can, if we have time, we can study into the individual stocks as well. So just like gold ETF, okay. So it was, of course, this is gold ETFs. The pricing is a bit different. The gold high was at 5,006 on this 30th January or 29th January because of the announcement that Donald Trump nominates Kevin Walsh as the Fed chairman, view that he's going to be hawkish on the inflation, that he may hike rate instead of ease rate. The gold don't like it, so gold came off, right? So, but today gold it kind of bounced back up again. Yeah, so gold I believe is going to continue to move up, but for the time being, is going to have this whipsaw. Gold or silver is going to continue to trade in this very broad range. Then before it start to pick up again, before the talk about de-dollarization, the talk about having lesser faith with the how US are doing things start to surface again, then gold should start to move up again. But for the time being, I think it's going to enter into a period of broad range. So where is gold today is at 478 for gold ETF price in US dollars. So it's bounced back up here pretty strongly. Okay, so what are the two strategies in today's topic about Singapore market still very bullish, but there are external risks that we have to be concerned about is to buy dips. Now, how to do that? Okay, so now first of all is that let me just bring you a little bit way back to about less than 2 years ago, 30th May 2024. Okay, now let's look at Singapore market back then, less than 2 years ago, and that's where the topic that I've been advocating with CGSI webinar is that then many investors complain to me that Singapore market is so boring, is moving nowhere. So during that May 2024, I say that if any quarter, because we are examining from the quarterly chart. So back then, fundamentally, I know that we're doing something right because Sing dollars is strong, and I'm still seeing that Sing dollar is going to get stronger back then, and even today is still the same. And so when I re-examined in May 2024, it was that when I look back in 2023, 2022, when we start to open up our market to the world after during the post-COVID, we are the first country, or at least Asia, to open up the aviation hub. And because of that, a lot of transition that happened, we became personally, I felt that we became first in a lot of hub, yeah, into green hub. Now it's become a green hub. It's not official, but personally, I recognize that in Asia, or at least in Southeast Asia, where the green hub, we may be looking into the nuclear power, which I think that's one of the big thing that I'm looking at as well. On uranium, I hope that the Singapore market will have some uranium. I'm not talking about atomic war, I'm talking about nuclear energy. Yeah, so that's something that I quite passionate about it since about just a few weeks back, something new. Now, so going back to May 2024 is that I believe technically, because fundamentally I see that we became transit from the pre-COVID, COVID to post-COVID, we've emerged in a lot of champion after during the post-COVID. So fundamentally, I think the world are seeing us very differently. I just have to bring you back to 2024 in May. So we're looking at the quarterly chart, and I said this that in any quarter, if it close above this resistance at about 3,005, because in history, I do not see any quarterly chart that close above 3,005. Although you may say that this one is close up, but I also look at the yearly chart as well. If you switch to yearly chart, you will know what I mean. But so I mentioned about any close of that quarterly chart. It could be that close in September or close in December in 2024. If it close above 3004, I'm seeing it's taking a very different shape that the resistance about 3004 for STI has already broken above, will be broken above, and should be on the way up. There's a lot of runway. So that was what we have discussed. So then in February 2025, that's about just about 2 years ago. But let me just bring you to this time frame is that a month before Liberation Day tariffs on 2nd of April. So it means that this was the third quarter of 2024. It have closed successfully above my resistance line. So that was February last year, and we are here. And of course, some will say that, oh, they missed the market. I say the same thing. The strategy remain the same even today. Is that if you find that you have missed the market, because at the point in time, my topic, I knew that a lot of investors will feel that they have missed the market. My strategy was to buy on dips. Even for today, we're about 5,000 here. I still advocate to buy on dips. So later on, I give you the updated level. Now, back then in what was the date back then? February 20th, 2025. I said buy on dips. So where was the dip? And the dip came during the Liberation Day. That was on the 2nd of April. So what happened is that we saw that dip came. Yeah. So the dip, because of that day, just that one or few days, it gave me that opportunity to finally the dip came, the announcement came, the stock market kind of a meltdown, not just in Singapore, but all over the world. Then it also pulled back up very strongly during that quarter. Yeah, that was during the this was 2025, January to March, and this was uh April to June. At June closing, it gives me a very nice hammer, as you could see here. So this what I mean by buy on dips. So sometimes buy on dips, you need to have some patience. Now, what if you're not patient? Because most of us are patient. We want to do things, but we cannot wait. Then I have a second strategy for you. Just wait for me for a little while. I introduce you to the second strategy. Okay. Now, as of now, if you find the STI is about 5,000, it's a bit too high. The blue chip stock is also about that 5,000 region. It's a bit too high. Then my proposition is to just wait. I'm still seeing that the long-term growth for Singapore market is going to be very rosy, and it could be the runway is very it's a long runway to go. But neither I want to get into a high price. I would like to bargain a price where if external factor happen, external crisis happen, our Singapore market will also dip as well. That will be a great opportunity for us to buy on dips. But whether it will come or not, I hope it come. But if it don't come, I have the second strategy. But let's discuss about the some reference point about what if there is a dip that's coming up because of the external factor. So these are a new reference line that I'd like to point to you. And as of today, the 26th of Feb 2026, STI is at about or was at about 4984. It's about here, right? So the new dip will be somewhere around 4,000 region. So this was the wedge that we discussed about it. And this was the third quarter of 2024. It closed above and it's move up. And this was the point where it was the Liberation Day on 2nd of April, 2025 last year. And since then, the market has been moving up quite nicely. You could see that every quarter, the market just keep on moving up. So, but do look out for dip. I'm not suggesting the dip will come, but if it come, it will be a great news. Yeah. So the first point that I'm seeing here is at around 4,000 region, which is the all-time high back then before it break this resistance. So do look out for what's the high, maybe just a few points higher. So this is a price that definitely I will hope I can get some if there's any crisis or cause this dip to come. Now the next one, of course, will be I hope that it will not come to here. If it come to here, it means that the wait is going to be longer. And if it come to here, the sink down is a bit too strong. It will also take a long while, just like gold. Just now we explained that usually when the correction is too deep, the recovery time will also be quite long as well. So I think 4,000 points just about right. But if it sink down a bit deeper about to about 3,004 to 3,006 is still a proposition, as long as Sing dollars remain strong, because there's always investor looking for safe haven. So Singapore is one of the market that most investors are looking at. So just want to update you the strategy. If the dip come, first level, a very crucial level will be slightly above 4,000, around that region. I cannot be specific, but it's around that period. So I hope that in the coming few quarters, we still be on this topic and hope that the correction will come. Now, what if the correction don't come? Or what if as a your personality is that you're not patient enough? Yeah. So I'm patient, so sometimes I can wait. But in the same time, also doing the second strategy. What is that strategy? It is to research on the laggards. To research on the laggards. Now, a lot of blue chip stocks have made it, have went up, but what if you miss it? Yeah. So I miss a lot of blue chip stock as well in Singapore. But the good news is that there's a lot of laggards. Now, how to look at the laggards is this. There are many stocks that did not move along with the STI bull run. Now, so how to identify them is that one trick is this. I would like to invest in some larger companies. Yeah. So because some of this money is not my personal money, so I don't want to risk it. Is children, it's my money meant for my children, so I give it to them. It's theirs, but it's under my stewardship right now. I have to make sure that the money is safe for them. It will be when I'm going to hand to them when the time is right, when they are mature enough to handle the money, uh, then I'll hand to them. But in the same time, while waiting for that to happen, I manage the money for them. Yeah, which is my money as well. But yet I do not want to be careless. So usually I have this habit is that I do not want to invest in too small company. If it's too small company, I will just trade them. Not really want to put in too much, but just trade and have fun. Now, so you may try maybe about 2 billion and above, say for example. And of course you can reduce it if you want, doesn't matter. Just give you an example. Yeah. So um, and the dividend, they must pay me at least 4%. If not, I think then the CPF pay us 4% is not bad, right? So I think anything, if you can pay me a good sized company, they can pay me 4% dividend, I think that would be great. Yeah. So once I do that, you can go to the SGX group. They have this filter function. Just have fun and play with it. I'm not saying that you have to look at 2 billion companies or more. Please go ahead to select $200 million dollars company market cap if you want, but I just want to showcase to you how it works, because then you'll give me this few handful of listing here. Then out of it, how I do it is that I'll just translate it to chart. So remember just now what I say that under fundamental analysis, which is I deploy both chart and fundamental analysis and combine them. If both of them gel together, it just gives me an added confidence that I think I would like to invest some money into this particular market or stocks. So I think I selectively, out of this whole lot, I put up a few. STI have broke above their all-time high and went up much higher. But we could see that a lot of blue chip stocks are not doing that well. Yeah. So maybe I should zoom into a company, say Olam. So again, I'm not suggesting that, I'm not recommending that, I'm recommending that you buy Olam, but I just give you one example here on technical studies. And for that reason, let me just go into the chart that I prepared for you. And I hope that you're seeing this chart here, Olam. If not, then Pei Ling, can you just give me a shout out that you're not seeing this chart here? So this Olam is weekly chart, which it doesn't align with the STI at all. The STI went up. So Olam, which is technically first. So usually I like to use technical, but you don't have to follow my style. You can use fundamental first and followed by technical. But I usually like to look at the technical first because it works for me. That I filter the potential stocks, then I'll study into the fundamentals. Yeah. So you could see that Olam over the last since 2022, when they restarted since 2022 until today, there's this very nice, almost like a straight line downtrend, 45 degrees downward downtrend, right? So in technical analysis, we believe that this is a resistance. If it break above, this may happen, right? Yeah, so I hope that it will break above. But at the moment, you can see that it's resisted at about $1 very nicely. And now earlier we mentioned um about external stress, about high inflation. High inflation, that potentially high inflation, earlier we studied about the PCE, the core PCE for US, is that it's very sticky. The inflation are not coming down to 2. It's been hanging at about 3. In fact, it's pointing up. And there's a risk that inflation may move up again. If things are not managed well, inflation may go up again for US and many other countries. That became a problem. But we have to understand that what is this company doing all up? Just give you an example. They are doing consumer staple company. So they trade in grains. So it means that inflation go up. It also means that food prices will go up. When food prices go up, likelihood that grains will go up. It also means that the company may also have a better profit because the food prices have go up. So, and of course, while let's say for example, I accumulate these shares, because I do not want to chase after the current blue chip stock, which is quite high price. I'm waiting for the dip. So the question is that, what if the dip do not come? Then I will look at the laggards. The laggard, it means that because in the first place you have not moved up, right? It means that I were highly unlikely is going to enter to a downside risk because I could see that support has been seen. You could see that support has been seen either here or here, the neckline. The support has been seen means that the downside will come down. Of course, I have to entertain the thought that they may have good profit. In fact, may enter the losses. It may continue to come down. But the thing is that the downside risk is a little bit limited, but the upside swing may be there. And then the as while I accumulate the shares, I have to collect some dividend. So this is to me at this moment is a dividend stocks where if I use my CPF or use my cash, it at least pay me better than not the special account, but at least pay me better than the ordinary account, or at least pay me better than my fixed D. Yeah, so this is something that I would like to consider. So in the situation that inflation started to pick up, and I think that you also will write through this as well. You may have an opportunity to appreciate. And I can say that there's a lot of company like this. I'm just giving you one example. So again, I'm not suggesting or I'm not recommending these shares. So, but if you're keen, do check with your local broker who is CGSI, because they're licensed broker. You can check with them on this. I just want to give you one example before we move over to the Q&A. Let me just share back my um, PowerPoint chart again. Okay, so we're moving on to the Q&A. But before I move on Q&A, I thought of just for those who want to get connected with me, every week I will produce a video. One of the exchange asked me to produce a video for them. So I will talk about what is the upcoming trend I'm seeing. Usually I do not like to talk about what is hot, What is hot, I think it's easy to talk about. It draw a lot of attention. But I always challenge myself to look at what is the potential upcoming trend to come. So that will be my topic. Every Sunday I'll launch a new topic. You can go to the YouTube and you can subscribe to it. So just wait for every Sunday, 10 a.m. I will launch a new video. So for more resources, can visit my website, waypeter.com. Can go to the individual tab. I will share some case study from there. You can join if you want to. So again, if you find what I've shared interests you, you want to exchange some ideas, go ahead. You can mail to me, conhao@waypeter.com. But if you try to ask me to recommend any stocks, and as usual, I will not recommend any new stocks. I throw back the question to you, say that, what do you see? Or maybe can you give me a proposition, what you see, then I will enjoy that sparring process with you, then recommend you any stock, which I can't anyway because I'm not a licensed broker like CGSI. So with that, I would like to turn this time to Pei Ling. You can submit your question. I do not know how you're going to submit your questions, but maybe there are Q&A or through chat box. I'm not exactly sure. Um, Maybe I just turn this time back to Pei Ling for this time of Q&A with the remaining 8 minutes that we have. Yeah.
All right, thank you, Konha, for the insightful and practical sharing. I'm sure many of our participants found your perspective on navigating the uncertainty in the Singapore market very useful. We'll now
Yes.
move on to the Q&A segment. Quick reminder, discussion today is general information and educational purpose only. Okay, so we have received several questions from the audience. I will start with the couple to kick things off. One question from Edmund. Uh, what about your views on Keppel Corporation and WeHer, please?
Okay, individual stocks.
Yeah,
Um, Maybe what I do is that I just look at the very technical aspects of it. Um, Capital Corp, right? Yeah.
yeah.
If you could provide me the um um provide me the code if you can. Yeah, if not,
Uh,
then I have to search from here. Yeah, I saw Capital Corp, right? Capital.
PN4, yeah.
Yeah. Okay, so Capital Corp is exactly like STR right now, right? It's at the as a high. Again, it doesn't mean that it will not go higher. But to me, as an investor, I always focus um about risk management because if you have not accumulated around this band, let's talk about strategy instead of looking at individual stocks. If you have not accumulated around this band, of course, most investors is that we hope that it will start to trend, which it did. Having said that, it doesn't mean that it will not continue to go higher. It may continue to go higher, or it may also do this as well. It may have because of external stress, external events, the whole STI and blue chip stock took some retracement before it started to go up. So that's my topic earlier. The first strategy is that buying the dips. But let's look at the financial numbers here. Just strictly look at the PE ratio. So 30 is not as bad as ST Engineering, but it's still considered pretty high. So 15 and below with growth potential will be great. So once again, it also depends on who you are, because for me as an investor, usually I would like to take some risk to buy into a very boring company. And I think for those who knows me, you're part of the case study group, that usually like to take a risk to buy into some very boring company at this point in time and hope that it will bounce up. So where was the I've term it as a biting point, means that the bite was technically is about here. You could see a very nice I mean, you know what I mean here is that you can see a very nice hammer. So all these are behavior signs, and they start to pick up. So that was STR already broke the high, and that was in 2025 June. STR already went up in the third quarter of 2024. So when we look at this, were the lagged back then. So where's the better buying price, entry price for Capital? It was here. After this created, it started to move up, where STI already on the way up, DBS already on the way up. So these are blue chip stocks. This could be on the way up, but I just felt that at this point, this price point, if you want to get in, it's more like to trade it than to buy and hold. Yeah, so buy and hold, it doesn't make sense to me. Yeah, because when I buy and hold, I like to buy and hold when they pay me some dividends, and I hope to also capture this impulse move as well. So that is my style. It may not works for you, but I just want to share with you some of the strategy here. Yeah. So maybe from the same I will not take on we her. I'll maybe take some other questions other than individual stocks. Yeah.
Okay, so there's another question asking about the banking segment. So, what is your view on the banking segment of Singapore? This client used to hold these stocks as dividend stocks, but she's now very concerned with the high P ratio, which is way higher than historical levels. How do you feel
Yeah.
their current high P level is justified?
Okay, then we talk about the Singapore stocks, then we look at the DBS. So the same thing, right? The DBS is this. Remember, if I look at the STI, let me just turn to STI here because it's very similar to DBS, right? Yeah. Then we have to look at the strategy here, okay, which I explained to you very quickly. Because there's two level of looking at it. If you have, because for this question is that is a lady, I believe, that you
Yes.
say that you have DBS stocks. That means you're holding, you're not thinking of buying it. But earlier question was that I think he's thinking of buying Capital Corp. So that's a different starting point, right? So, if you have DBS that you're not too sure what to do, you're afraid that it may correct, which I think you are rightly to have this concern because when the market is growing, I still believe that you'll grow. Like for example, like STI. So that's what I'm seeing here for STI. I think it's going to be something like this. For STI over the long term, along the timeline, there'll be some correction, but you'll start to move up again. You'll start to move up again, right? Something like this. So your concern about DBS is very similar to STI. That's what I'm trying to point out to you here. Is that what if the market correct? You have some holding maybe in the past. Now, usually what I'd like to do is that we cannot get too greedy. Whatever you have, and I think the good news is that unlike the past where DBS only the minimum broad lot is 1,000 shares, right? But now you can trade as little as 50 shares if you want to. Now, so what we should do is that if that is your concern, maybe you should cash out some. Yeah, if you have 1,000, then cash out maybe 200 lah. Then you still have another 800, right? So if it ever come back down, then you reinstate back. Yeah. So that's I think that strategy is for that lady who have a position, but yet you're concerned. But again, I'm not suggesting that you'll come down. So what if you cash out 200 shares, you have 1,000, you cash out 200 shares, and DBS continue to move up? Then you have missed the run. Not exactly, because I face this question all the time, but it's all about managing our position. So what I do is that I use that 200 shares proceed for DBS. Anyway, you have made a lot, okay, 200 shares. I will redivert it to the laggards, which is just now we identified one stocks on a case study basis. Then I'll do that. For all you know, in time to pass, DBS maybe now it's at 57, it may got 64, but in percentage gain, how much is it? But if you buy a stocks that's maybe it's at $1 today, but in the same period, it may move up to 120, hey, or $1.20, and that's a 20% gain. So this is something that we personally have to deal with it. And I think one way to overcome is that we just have to be contented. To be contented investor means that got profit, we take some, then release that cash and reinvest to something else. So I think that's a very good questions that we have. One is Capital Corp, where I believe you have not bought any yet. The other one is DBS, where you have bought some years back. I think it's a good strategy. It kind of cover a wide spectrum of strategy today. Yeah. So maybe one last question before we go, Pei Ling.
All right. Not there's another person asking about cut loss strategy. So notwithstanding all the research done and the long-term bullishness of SGX, right? Do you have a cut loss strategy and how do you determine that?
Personally, I don't have a cut loss strategy because unless I trade, yeah, so I make it very clear is that I have two portfolio. When I trade, usually I will use margin account, I will leverage, I will trade. That means I don't use my own money, I use a borrowed money. It may sound scary to you, but it make a lot of sense. It means that I trade them, means that even at high price I buy, but I have a point of knowing when I'm wrong. Okay. If I'm wrong, I will exit. Say, for example, let's go back to DBS again. Um, let's say DBS. Okay. Yeah. But again, it's just some technical study here. I'm not recommending anything. Um, Now say DBS, I saw this uptrend line. Very beautiful. Eh? Hey, I just saw that it can't break below. And say, for example, um, I feel like I want to take profit, say for example, or sell short. Yeah. Say for example, take profit is you also consider sell short, right? You short position if you take profit because you broke this line and you also saw that there's a double top. Yeah, so it's just very structured, right? Say you have take profit here or you have sell short. Yeah, so sell short is a new position. But when will I cut loss? Let's say, for example, if I sell short, I use margin account to sell short, then this is a point of entry here, a new position. If I sell short at 57.16, then I think when will I cut loss is that if you break this all-time high, I will cut loss at about $60. Means that it's not, say for example, if not coming down, instead if it's just come down a little bit after a short and it start to move up and break the high, so this will be a point of reference that I will cut loss. So your question about, I'm just giving you a very inverse relationship. I hope that you're seeing what I'm trying to say here is that usually for investing, I do not cut loss unless fundamentally something have changed. It means that, say for example, like DBS. So in 2022, 2023, I've been advocating buy Singapore stocks, accumulate Singapore stocks. I keep on emphasizing a lot, right? Say for example, then I bought around here. Yeah, I bought around here, say for example. Then the market started to come down, yeah, to about 24. Say my average price is around 28. Then it started coming down to 24, 22. But what can I do? But I if I at a point in time, I still look at Singapore as a whole, the banking stock should do well, but sometimes within our control, but due to many other factors, the market may come down. Where I still view that Singapore is good. I still view at a point in time, a lot of family office are coming here to set up companies. A lot of funds are flowing into Singapore that will benefit Singapore banks at a point in time. But it came down. But I bought because of not just technical, fundamental, I believe, but it came down to 22 or even $20. But when I look at the fundamental, it is family office are still setting up. They will need banks to facilitate their transaction. So it should be good. So I will continue to hold it if fundamentally do not change. Yeah. So at this point, if you get into stocks, I would say that your position as a trader, then yes, definitely you have to have a stop loss strategy. So it's between a trader and an investor. So when will I cut loss for stocks like this, or for example, like the example I given to you, Olam, if fundamentally something have changed, that for example, like Olam is making losses, I do not see their management doing well, and I think their outlook is wrong, instead of doing grains, what they're good at, animal feeds, what they're good at, they they turn into property investment. That's not their forte. Then I will cut loss because fundamentally it doesn't gel with what I first believe in them when I invest in them. So, okay, I think I've exceeded my time. So thank you for the questions. Yeah, thanks, Pei. Yeah.
All right, thank you, Kon Hao, for sharing your insights and perspective with us today. I also like to thank all participants for joining this session. Okay, we hope today's discussion has provided you the means to navigate the market uncertainty and recognize opportunity as they arise. So, for those who may wish to revisit today's discussion, a recording of this webinar will be made available on our CGS International YouTube channel, so you can view them on our YouTube. We also have a playlist with previous webinars with Kon Hao, so you can view all the previous webinars on this playlist itself. All right. Thank you once again for your time, and we wish you have a pleasant evening ahead and look forward to welcoming you to our future CGS webinars with Kon Hao again. Thank you.
Thank you.